Yo, 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 what's up, stock compounders? Good morning, or good afternoon, or evening, depending on where you're at in the world. I am in the San Francisco Bay Area in California, so it is 9:45 a.m. here. It's pretty overcast. It's a little chilly today. Feels a lot like fall. So, what do you guys happen? What are you guys seeing in the market this week? Pop your questions into the chat. In the meantime, what will I do? I'll share what I've been researching, what I've been digging into this week. Let's see, this book here. Can you guys read that? Reality is not what it seems. Okay, this is a physicist in Italy. I'm finding it fascinating. He talks a lot about Einstein in the book. There's a few quotes from Richard Feynman. And I'm really resonating with what Charlie Munger says about, investing is such a multidisciplinary endeavor. And there's so much we can take from physics, from biology, evolution, all of this stuff that can really help us analyze businesses and see things from a different perspective, have these aha moments, as Monish Pabrai said in his recent Q&A with University of Georgia. Hey, from Germany, Nima, nice to have you here. So, how I found this book, Reality is Not What It Seems. I've been digging this book. It's about Naval Ravikant. It's the Almanac of Naval Ravikant. Montana in the house. We got Michael. Welcome, Michael. Michael, are you a rancher by any chance? That's when I think of Montana, I just think of these vast open grasslands with people grazing. Obviously, there's a lot of fly fishing in Montana. Just a beautiful place to go to settle down, just to get away from the buzz of the city. Florida in the house. Almanac of Naval, loved it. Yeah, it's a fantastic book. And at the end of the book, Naval has recommended reading. I'm just going to pull that up real quick and read some of the titles for you guys. It's, far from being all about investing in venture capital, which Naval founded Angel List, so he's very deep into that community. But I really like this quote from Naval when it comes to what we decide to read. The truth is, I don't read for self-improvement. Okay, this is from Naval. I read out of curiosity and interest. The best book is the one you'll devour. Okay, so really resonate with that. For much of my life, I've been in sort of a mode of self-improvement. Like, what books can I read that are going to help me? Okay, that are going to help me get to where I want to go faster, where I think I want to go. That's shifting. Okay, I'm being more guided now by what am I curious about? What do I want to explore, rather than to get the carrot that's hanging off the stick in front of me. And I think it's a profound shift in just how I approach reading material. So a couple of books that Naval highly recommends: Sapiens, A Brief History of Humankind. I haven't read this whole book. I've read pieces of it. I think I listened to much of it on Audible. He says, Sapiens is the best book of the last decade I have read. He had decades to write Sapiens, referring to the author, Yuval Noah Harari. There's lots of great ideas in there, and it's just full of them, chock full per page. So that seems to be kind of the highest recommendation from Naval. He talks about The Rational Optimist from Matt Ridley, the most brilliant and enlightening book I've read in years. Matt Ridley has written 4 of my top 20 books. So that includes Genome, The Red Queen, The Origins of Virtue, The Evolution of Everything. So Naval seems to have a man crush on Matt Ridley. So I have the Rational Optimist um, sitting in my office. So I'll have to crack that open at some point here. I've got quite a stack of books though. Skin in the Game by Nassim Taleb. Highly recommended The Bed of Procrustes, Philosophical and Practical Aphorisms by Nassim Taleb. This is his collection of ancient wisdom. Six Easy Pieces by Feynman. He says, I would give my kids a copy of Richard Feynman's Six Easy Pieces. Richard Feynman is a famous physicist. I love both his demeanor as well as his understanding of physics. Yeah, so my impression of Feynman is that he's just so well versed. He's not alive anymore. I think he did he pass away? It might have been in the 90s even. Um, but he's just so well versed in physics that he can explain these quite complex concepts in simple terms. Okay, and I think that's really the calling card of someone who is an expert, someone who really understands the material. They can break it down to its essence and help people who don't really have any background on these subjects still get a good sense for what's happening. Um, Thinking Physics by Lewis Carroll Epstein, The Lessons of History by Will and Ariel Durant, The Sovereign Individual, Poor Charlie's Almanac. So Naval has a lot of respect for Charlie Munger. This comes up in many of his talks. He says this masquerades as a business book, but it's really just Charlie Munger's advice on overcoming oneself to live a successful and virtuous life. Overcoming oneself. I love that the way that that's framed. There's just so much truth in that. We get in the way of ourselves so often. All of these biases, these psychological misjudgments, self-sabotage. So obviously a fantastic book, well known in the investment community. Reality is Not What It Seems by Carlo Rovelli, which is the one I just showed you guys. The Beginning of Infinity. Whew, that one's dense. I started listening to that one on Audible by David Deutsch. Not the easiest read, but it made me smarter. So I'll have to take another crack at that one, The Beginning of Infinity. But anyway, guys, there's so many book recommendations from Naval, and it's a great place to start. If you're trying to find your next book, maybe you're about to take a flight, doing a road trip, just find one of these books on Audible and start chewing into the content. This is a great starting point. So let's jump into some chat here. Ronnie, greetings from Belgium. Hey, Ronnie, how you doing? Glad to have you here. Michael, nope, analyst, wide open here. Amazing place away from the markets. Right. So, Michael, yeah, of course, you're not a rancher. There probably aren't too many ranchers here in the live chat on a stock YouTube channel. Yeah, it's got to be an advantage to be an analyst in Montana, really away from all of the noise. It reminds me of Guy Spear, kind of over there in I think he's in Zurich, somewhere in Switzerland, and of course Buffett in Omaha, and I don't remember where Nick Sleep. I feel like I should know this. Where Nomad Investment Partnerships was headquartered. I imagine it was probably away from all of the noise as well. Let's see, from Zurich. There you go. Severe. Zurich. Maybe he's buddies with Guy Spear. From Spain, we got Tom. I'm sure there are quite a few people in Zurich. Let's see. New Year's resolution for 2022, make myself look like sloth changing positions when compared to Guy Spear. Whew. So you take a mega sloth like Guy Spear and you want to out sloth him. So yeah, I mean, Guy Spear has a little bit more activity than what we see in his 13Fs. He did buy Prosus recently, which doesn't show up in his activity. So he is doing some things, but yeah, he's one of the slower, I would say, investors to make moves in the portfolio, which I'm really starting to develop an appreciation for. Making moves slowly and very thoughtfully, and really waiting until there's a very high bar before making adjustments in the portfolio. So I echo that New Year's resolution. What is with Baba now? Yeah, that's what a lot of people want to know. I'm going to be making a video, I think this week, about Baba and the whole delisting prospects, and what do we do? What do we do if Baba gets delisted? Um, I think it just goes back to what Benjamin Graham talked about, where you're dealing with this manic depressive Mr. Market, and we can either use that to our advantage by um, buying things when they're ridiculously cheap and selling things when they're ridiculously expensive, or we can use the manic depressive Mr. Market to our detriment by assuming that Mr. Market is wise always. So taking advice from Mr. Market, meaning seeing that there are people fleeing a company like Alibaba, the stock price is going down, people are exiting, and deciding, yeah, that's what I should be doing too, following the herd, right? Aswath Damadran, he did a video. I don't remember what video it was, but he showed this image of lemmings going over a cliff. And it's deep in our evolution, guys. This is not something to take lightly. It's not something to gloss over. It is deep, this desire to be part of the herd. There's safety in the herd. But that doesn't necessarily apply to investing and markets. You don't necessarily want to be the herd if you're a stock picker, because you can't beat the herd if you join the herd. And if you're going to join the herd, why not just buy an index fund? Why not be the market? So that's my take. I think China, it's a very different animal, right? Than most governments around the world, than most markets. So it's challenging. It's difficult for people to wrap their heads around the CCP and the regulations and what's coming next, right? It's we don't have a lot of similarities, many of us in me in the U.S., for example, to really try to get some sense of what's coming next, some predictability, and you know uncertainty is usually throws stocks, throws markets into a tailspin, and I think that's what's happening with Alibaba. And I think people who are willing to hold that as a business owner over the long term are going to be rewarded. Could I be wrong? Absolutely. But I think you know the deck is stacked in the favor right now of investors in Alibaba. It's just a matter of time frame, time horizon. So patience, like Buffett says, the stock market is a mechanism for transferring wealth from the impatient to the patient. So that's my that's what I'm seeing with Alibaba right now. SITG for investing is amazing. What is SITG? Michael, let me know. Hello, Boomer. Hello, Boomer. Yes, and everyone. Yep, excited to have such a vibrant crowd here. Hi, Boomer. What is the longest time you've held a stock? Yeah, that's a good question. So I haven't been a stock picker for all that long. I haven't been a concentrated value investor for all that long. So the company I've held the longest is Micron. And let me just see when I bought Micron. I bought Micron in um, don't make it that easy to find. Let's see. I bought Micron. Do 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 do. Here we go. In May of 2019. So about 2.5 years I've owned Micron. So that's the position I've held the longest. Yeah, I'm excited to when I can say, I've held this position for 10 years, not necessarily Micron, but when I have a little bit more time in the portfolio to let things mature. Let's see, SBLK with $1.25 dividend. SBLK, what is that? SBLK, Star Bulk Carriers. So we have a shipping company. Looks like the stock price is $24. I don't know if that's a quarterly dividend or an annual dividend, but I don't even know what the question was. But was December 3rd the dip? Um, yeah, if only I knew that. It certainly felt like a dip. Question is it going to continue to dip? Or are we going to have a big rebound like what we had in March of 2020? These questions are just too hard for me to answer, and I try not to even speculate on that because I think most of the time I'm probably going to be wrong, and it's not a fruitful way to spend my brain power. London Nomad. Okay. Yeah, I think that's right. Nomad Investment Partnership was in London. Demodrin is pronounced Thermotherin. Thermotherin. I'm not sure if that's true, Vic. I don't know that I've ever heard Demodrin say his name, but I think on his website he pronounces it. Let me see. Maybe not. He's not going to help us out with that one. But I'm pretty sure I've heard him say his name, and it's Demodrin. So we'll just agree to disagree. How do you remember all that you read? I go through a lot of books, but recalling all of the learning or even the highlights is not that simple. Even notes on each book can become a book by itself. Yeah, that's a great question, Suvir. Um, I think the best way to learn something that you're reading is to apply it after you read it. So that's what I try to do when I come across an insight in a book or even a YouTube video. If I'm watching a Pabrai Q&A or something like that, if he shares something that's intriguing to me, I try to go down that rabbit hole on my own, do a little digging into that, and that really helps kind of embed that learning in my system. So that's some of the best advice I think I have for that. Also, if you're just reading really high quality content, if you're reading biographies, autobiographies from great CEOs, stuff by Buffett, stuff by Munger, you're going to come across things multiple times. You're going to come across these mental models multiple times, and each time it's going to sink in a little bit more. So I think some of that is just going to take care of itself if you're reading, high quality content. Yeah, I kind of gave up on I mean, I take notes. I take notes when I regurgitate stuff in videos for you guys. Like if I watch a Guy Spear talk or a Monish Pabrai talk, that helps. It actually really helps to teach others after you learn through social media, like on Twitter or on YouTube. That may be the single most valuable aspect of this whole YouTube endeavor for me is having to learn what I'm presenting well enough that I'm comfortable sitting in front of a camera and talking about it. That's a fairly high bar for me. So, and of course, there's going to be holes still, but knowing I'm going to have to present really encourages me to patch up some of those holes before I take that on. So those are a few thoughts. But different people learn in different ways. I think there's a lot of value in figuring out what kind of learner are you? Are you a visual learner? Are you an auditory learner? What modalities work best for you? And then you can really focus on those particular formats for digesting content. What are your views on gold as a store of value? Ooh, I don't think I've been asked that before, at least on a live stream. Um, my issue with gold, if you look, so I think Li Lu might have come up with a chart over like 200 years comparing gold, currency, bonds, stocks, real estate, all of that. It's weak. Gold is very weak over a long time horizon in terms of um, creating value, even being a store of value. So personally, I'm not in the store of value um, cycle stage of my life. I'm really in the growth stage of growing my portfolio. But let's say I get to a point where, I'm financially free. I still want to be invested, but I want to be invested in a more defensive way where my focus is much more on not losing money than, kind of swinging for the fences. Um, I still think you can do a lot better than gold in terms of as a store of value. I think owning great businesses, um, like I think I'd be much more inclined to look at what Terry Smith is doing and just clone what he's buying each quarter than to put money in gold. Uh, Clearly, Terry Smith has demonstrated a pretty compelling framework for identifying great businesses that can make it through inflation in a robust way, in a resilient way, and outperform the market. I'm confident that he's going to continue to do that. So that gets me much more excited than gold because with gold, there's no earnings, right? There's nothing, there's no compounding powder with gold. With a business, you've got earnings, and the better the business, the stronger the earnings. And it's really that ability to reinvest with those earnings back into the business that compound wealth. Okay, gold isn't going to do that for you. Gold is really just greater fool. It's hoping somebody else is willing to pay you more for that commodity in the future than what you paid for it today. But a business spits out cash. Okay, uh, and obviously, the better the business, the more cash it's going to spit out over time. And that reinvestment of that is really what compounds. So I just don't see the compound growth engine in gold. And why would you buy something without a compound growth engine when you can buy something with a compound growth engine? Germany, Sebastian, what's up from Germany? Good to see you, Sebastian. Will you buy SFIX? I don't know what that is, so probably not, but Stitch Fix. It is pretty low right now in terms of stock price, $19. Stitch Fix sells a range of apparel, shoes, accessories through its website and mobile applications in the United States. Okay, so it's one of these retail e-commerce businesses that people seem to be attracted to recently. ASOS. What's the one that Andrew Rosenblum just bought? I don't remember. It's the Nordic kind of fashion e-tailer. Honestly, I don't have a whole lot of interest in these internet and direct marketing retail businesses. Obviously, Amazon crushed it in this space, but I think it's tough. I mean, the margins in this area have historically not been that great. I think gross margins 45%. That's quite strong, I think, for this industry. But why go into a business with gross margins of 45% when you can find businesses like PayPal and Dropbox and maybe even Coinbase, businesses that have much higher gross margins. That's kind of where I'm at. And it's not an industry that I want to spend much time learning about. It's not that interesting to me. I think there is a guru recently that bought Stitch Fix. Let me just see if I can find it real quick on Dataroma. So there's one super investor, Bill Miller, bought into Stitch Fix. I don't know when. It looks like he trimmed it a little bit in the third quarter. No, Stitch Fix isn't on my radar. If Munger will sell Baba, would you sell it as well? Whew, that's a good question. Yeah, that is tough. I would think very hard about my Baba holding if Pabrai stays out, if he doesn't buy back in next year. I think a lot of what got Pabrai to sell was like a tax loss harvest situation. But yeah, if Pabrai doesn't buy back in and Munger exits, which I have a very hard time believing that Munger would sell, considering he's been doubling down recently. But yeah, if Munger sells, I'm not automatically going to sell, but I'm going to take a very close look at what's happening with Alibaba. So I guess that's my answer. Not an automatic, but yeah, it would concern me for sure. Dark Knight, do you plan on cloning Terry Smith? Absolutely, I plan on cloning Terry Smith. Unfortunately, he doesn't do very much. I think, and I'm a little bit more inclined to clone Smithson, which is the small and mid cap fund within the Fundsmith kind of portfolio of funds. The last purchase for Smithson was Wingstop. I looked at Wingstop. I couldn't really wrap my head around Wingstop. So took a pass on that one. But, PayPal actually has me interested. I think it may have bounced back a little bit over the last week or so. But it was getting pounded, PayPal was. And I think PayPal is the second largest holding for Terry Smith. Yeah, it bounced back a little bit, but it's still potentially compelling. PayPal is. I think PayPal is a big position for Yen Liao and for Fundsmith, and obviously there's a lot of other great investors that own PayPal. But yeah, Terry Smith, I am very impressed with him as an investor. It's a little unfortunate that he runs so much capital, so he's probably not looking other than Smithson. And Smithson isn't, I don't think it's really even in the small cap space. They call it small and mid cap, but I think the smallest holding is like 2 billion, which is right on the edge of small and mid cap. But then the next smallest holding is like 5 or 10 billion or something like that. So they don't seem to play very much in the small cap space. But yeah, if I see even a large cap that Terry Smith kind of backs the truck up with, I'm going to be taking a look at that. So and obviously, Terry Smith bought Amazon recently. I made a video about that. Amazon. Okay, so here's what I'll say about Amazon. I don't really feel like Amazon makes the world better. Okay. And a lot of anyone who owns Amazon is going to want to fight with me about that. But Amazon has made it super convenient to be a consumer, at least in the US. Basically, one click, I can buy anything I want to and have it shipped the next day. I don't necessarily think that that's good. I don't necessarily think that that's good for society. Um, but some of my values around permaculture and sustainability, they just don't quite mesh with consumerism. That's me. So, take that how you want to take it. But for me, I don't feel particularly inclined to own Amazon just because of that kind of values mismatch. I do really like Audible. I shop at Whole Foods. So there's certainly businesses under the Amazon umbrella that I really appreciate. Um, but the Amazon retail component, it's not something I want to own. Hi from New York. What's up, Giovanni? Have you looked at SPWH? Merger with Basco fell through and stock tanked. Looks very undervalued right now. SPWH. I haven't heard of SPWH. Sportsman's Warehouse. Okay, I have. I think this was written up as a special situation in Value Line not that long ago, maybe within the last 6 months or so. Looks like it was trading around 17 and now it's down to 13. Yeah, based on the size of my assets, I should perhaps be interested in special situations plays like this, but I'm not really. I really want to, kind of the Pabrai framework of buying into a business that I could just put my feet on my desk and ride off into the sunset for decades. So, um, yeah, a situation like this, like with what's happening with Sportsman's Warehouse, it's not that compelling to me. I don't think it's the highest use of my time in terms of compounding my capital over many years. But it very well could be a great short-term opportunity. And obviously, people can crush it focusing on short-term opportunities. You look at how Joel Greenblatt ran his fund. He was generating 50% annual returns, right? Was it 20 years? Maybe it was 10 years. It was something in there, but just ridiculous returns looking at these special situations. So it's a path, right? It's a potential path to the promised land. It's just not the path that I resonate with. Any suggestions on Apex spawners? My portfolio has 6 stocks: Amazon, Google, Baba, Tencent, Berkshire, and Facebook, split evenly, give or take. Looking for 3 more. Yeah, those are obviously incredibly dominant businesses. In the words of Terry Smith, I would say that those have already won their, the sectors that they operate in. I don't have any other suggestions on Apex spawners. I would look at Terry Smith's portfolio. That seems, in line with what you've already got. I think Terry Smith owns at least a number of those. Owns Amazon, Tencent, and Facebook. I don't know if he owns Google. I don't think he owns Google. But yeah, I don't have any at the moment to recommend to you. Maybe look at PayPal. Um, Looking at IAC. Yeah, IAC is intriguing to me as well. I think more from a learning standpoint than from an investment standpoint. It seems like the content, the letters to shareholders, to investors that IAC put out, many people liken to the Berkshire letters. There's just, they're very thoughtful. There's a lot of learning to be had through those letters. So the latest one from Q3 is one that I'm sinking my teeth into. And I think it's Dennis Hong at Shaw Spring Partners that owns a pretty big stake in IAC, added to that the last quarter. So yeah, it was on my short list of things that I noticed from investor buying activity in the third quarter. But there are picks from the third quarter that are higher up on my list in terms of companies to see if I can understand than Interactive Corp. Vic, is it worthwhile to buy a stock before a big dividend, then sell after? Didn't work with Dillard's. His stock crashed after people tried this. Yeah, I think the price is going to drop after the ex-dividend date. I believe this is something I haven't looked much into. I don't focus much on dividend-paying stocks. I would look at, there's a strategy that, what is his name? Matt Peterson uses to try to capitalize on inefficiencies with dividend payouts. So I would watch his annual meeting. It's on YouTube, the Peterson Capital annual meeting. He talks a little bit about this dividend strategy, but I think it's probably more in depth than simply buying before a big dividend and selling after. So, but I don't have any experience with that. Pete here from North Carolina. What are you reading now? Just finished Terry Smith's book and looking for the next. I'm reading Genghis Khan and the Making of the Modern World. That's something I'm listening to on Audible. It's intense, as one would imagine. But according to Yen Liao, it's one of his top 5 investing books. And it's not specifically about investing, but it's really about strategy. It's about how to win, how to pick unfair fights, is how Yen Liao frames it. And that is such a big part of investing, is picking the unfair fights, picking companies that really have an unfair advantage in their market, picking monopolies that don't want to be seen as monopolies, don't want to be recognized as monopolies, as Pabrai kind of put it in a few talks ago. So there's a lot to learn from Genghis Khan, and that's what I'm reading now. This is a great book as well, as I showed earlier on in this. Reality is Not What It Seems by Carlo Rovelli. It's kind of a primer on physics. He's a theoretical physicist in France. So very, very digestible, even for someone who doesn't have much background in physics. Let's see, Paul, admire your conviction. My favorite investment this year is STNE. I've heard of STNE. I don't know what that ticker represents. StoneCo. What is StoneCo? I want it to be like a gravel company, like a quarry. Of course, it's not. IT services provides financial technology solutions to merchants and integrated partners to conduct electronic commerce in Brazil. So it looks like this company is headquartered in the Cayman Islands, and it looks like much of their operations are coming from Brazil, or their revenue coming from Brazil. This has taken a pounding. It was up $92, $94 a share back in February, and now it's down to $18 per share. That doesn't mean a whole lot to me because things can be crazy priced, and just because they dropped a bunch doesn't mean they're cheap. So I look at that very loosely in terms of what the recent trend has been in price. It's a $5 billion market cap company. And guys, honestly, this isn't really a space that I feel like I can wrap my head around. Um, there's just so much innovation happening in this space. And I have no confidence in myself to be able to look out 5 or 10 years in the payments space and feel like I have any idea what that's going to look like a decade from now. So this one's an easy pass for me. Down 80% from, yep, I saw that. Vic thinks it's on sale. He looks like he bought some. David, have you looked in? Right, there's another STNE, Berkshire clone Square of Brazil. Calling it the Square of Brazil. I mean, that obviously sounds incredibly sexy. Did Berkshire buy into STNE? Let me just take a peek at that. STNE. So it's 13 hundredths of the Berkshire Hathaway portfolio. It doesn't look like there was any activity in the most recent quarter. But I guess that might be good, right? If Berkshire was buying back when it was in the 70s or 80s, and now it's in the teens, that could be compelling. But let me see if I can quickly see history when Berkshire added into this. So I'm not able to track the history because it's too far down the list in terms of conviction with Berkshire. But that's intriguing in and of itself that the Berkshire bought in. But yeah, I get very cautious when I see comparisons to companies like Amazon or Square in these emerging markets, like Coupang being the Amazon of Korea, things like that. It's really easy for people to get carried away by comparisons like that, and for the price of businesses like that to become exuberant. And it may be exuberant at 17 or 18. Just because it was 90 doesn't mean it's a good price today. So I would really just have to look at what are the fundamentals of the business? What is it likely to be worth in 5 or 10 years? And I don't know how to do that for StoneCo. So it's a pass. How do you generate income to spend on your daily expenses so you have time focusing on investing? Yeah, how do I generate income? Um, YouTube, more and more. I'm generating income. I also do consulting for landscaping. So, in a past life, I guess, yeah, you call it a past life. I was into permaculture. I interned on a few different permaculture farms where the vision was to basically create an agriculture in nature's image. So, what that looks like is what is the natural vegetation in a particular climate or a particular ecology? Let's take Madison, Wisconsin, for example. This is where I kind of started this. So Madison, Wisconsin is forest savanna. Okay, there's different parts of Wisconsin that are forest, different parts that are savanna. So if I were to recreate an agriculture in that image of savanna, let's say, what would that look like? I would create a savanna with trees that produce food. Okay, so like nut trees that are related to the native trees. Okay, so oak was the primary tree in the savanna, oak hazelnut. Okay, the native vegetation in southwest Wisconsin is oak hazelnut savanna. So instead of oak, maybe I'd do chestnut, okay, because chestnut is related to oak. And I would create a chestnut hazelnut savanna. Okay, so it's a food producing savanna that's related to the native vegetation. And then with the savanna, that's just grassland. So I would graze cows, sheep, probably run chickens in between the rows of the chestnuts and the hazelnuts. And that's exactly what this farmer was doing in Wisconsin. So that really gets me excited. Creating food producing systems in the image of nature, what the natural vegetation would be there. Um, so I can go a lot deeper into that, but I won't because this is an investing live stream. But so that's some of what I do is consulting around regenerative agriculture, I would call it. Have you had a chance to look into Semler Scientific? No, and I'm kicking myself for that. That is at the top of my list of companies to dig into. What's the price done recently? Okay. So over the last 3 months, it's down. So that's good. I haven't missed any kind of pop with Semler Scientific. This was a recent purchase from Yen Liao with Araved Global. That's who I got the Genghis Khan book recommendation from. Yeah, I want to dig into Semler. So if any of you have done that already, let me know what resources I should dig into for that as well. Oh, choo-choo, where are we? We're thinking the same, David. Good. Good. I'm glad we're thinking the same. Greetings from Italy. Pietro from Italy. I need to visit Italy. I have never been. And Mediterranean climate, it's a lot like it is here in the Bay Area. I'd love to explore the countryside of Italy. Vineyards and olive trees, and it just sounds beautiful. Farouk, Rohan, okay, good. You guys are chatting with each other. Anyone looked into Wix, Pat Dorsey's high conviction bet? I have not looked into Wix. Actually, I get puzzled when I see Pat Dorsey buying into Wix. I have no idea why Wix is compelling to him. I don't think there's been any Wix write-up on VIC. So if any of you have insights into Wix, what is Pat Dorsey seeing in that company? Because I do respect Pat Dorsey a lot as an investor. So let me know if any of you have any insights on that. Let's see, where are we? 47 minutes. Okay, so we still got some time. I can't figure out their moat. Yeah, ditto. I once saw a video where you showed a site with investment letters for different funds. Which site was this? I forgot. Investment letters for, yes. Okay. That one is called Vintage Value Investing. Let's see if he's put up the Q3 letters yet. I just gave him a poke on Twitter about this recently. No, he just got the Q2 hedge fund letters. So it seems like the guy who's behind this, he's got a really interesting story. He just tweeted about not too long ago. He's taking a bit of a break from social media now, but he actually bought this website, Vintage Value Investing. He was overseas serving in the military. He read Rich Dad, Poor Dad by Robert Kiyosaki, and he thought, yeah, I want to buy a business and buy a business that's already generating cash flow and see what I can do with it. So he bought this website, Vintage Value Investing, and he's kind of made it his own. So it's a pretty interesting story, but it sounds like he's taken a little bit of a break, wants to kind of regroup, figure out how he can really provide a lot of value for his subscribers, for his network, and supposedly he's currently in the process of putting out that Q3 list of hedge fund letters. So keep an eye on that. It's just vintagevalueinvesting.com/hedge-fund-letters. So that's where you can find those. Incredibly valuable resource. Let's see. What do you think about the recent tech and growth stocks sell-off? A lot of value guys seem excited about the bubble popping due to inflation. I feel some of these stocks are undervalued. Facebook and Twitter, for example. Um, well, let's see where Facebook is. Facebook, 331. Not, it's about a $900 billion market cap right now. Facebook could very well be undervalued. Um, Facebook is a tough one for me to wrap my head around. It was fascinating hearing Guy Spear liken Facebook to like a tobacco company, where people get addicted, where people develop eating disorders because of people judging them on Facebook and needing to look a certain way. Um, People being predators on Facebook. I think I resonate more with what Gary Vee says about this. Social media. Yeah, I think there are some harmful elements of social media that they can probably be doing better, from the company end, like Facebook and Twitter and whatnot. But at the end of the day, Facebook isn't doing all of this stuff. Facebook is really just shining a mirror on ourselves. Okay, it's not changing us; it's exposing us. And I think people are hesitant to take personal responsibility, and they want to point to a big company like Facebook, to blame, right, rather than taking personal responsibility. So, I think there's some of both. But, I'm not one to point the finger at a company like Facebook or Twitter for all of these, socially, what do you wanna call them? Socially disruptive patterns that people are developing, around these businesses. But to be honest, I don't really use Facebook. I don't, I don't really use Instagram. I spent, like, a year and a half posting on Instagram every day. Okay. I grew my following on Instagram to like 40,000 people. And it was in a different niche. It was in the permaculture, kind of sustainable agriculture niche. But at the end of the day, I didn't feel like I was getting much value out of that. And that's not necessarily to blame Instagram. It's possible that had I been focused on investing, building an investing account through Instagram, that might have gone differently. But I just don't use Instagram or Facebook that much. And I think there's some serious headwinds facing a company like Facebook that really depends on collecting data to advertise, to really make that advertising engine hum, which is the core of the revenues for Facebook right now. I think there are some changes coming, in terms of privacy and user transparency about what data is being collected. So I think there are some headwinds facing Facebook. Of course, we're also, uh, obviously, Facebook has pivoted recently, called Meta. So who knows what they're going to roll out with VR and AR and Web3 and all of that. I wouldn't bet against Zuckerberg to hit another home run in that space. Um, but I don't use the product, and I think it's going to be difficult. I think it's going to be tough, for Facebook to reinvent itself post, advertising. And I'm not willing to bet on that being a success. We got a super chat. Thank you very much, Maximilian. Back again. Glad to have you back, buddy. Baba delisting may be a good thing. So, okay. Thoughts on payments? Visa, PayPal, GPN. This one looks amazing right now. Thoughts on payments? Yeah, I am far from well versed in the payments space. It's something that, who's really solid in the payments space? I think Naspers is probably quite well versed in the payment space. having their wagon hitched to Tencent for so long. Terry Smith seems well versed in payments, and I think Yen Liao is also really paying attention to that space, payments, and I think PayPal is a fairly large holding for him. Um, but yeah, that would be my approach. I think there's going to be a lot of tailwinds in the payment space, and Terry Smith talked about this recently. He owns, I think, Visa, PayPal, maybe even Mastercard. And he thinks they're all going to do incredibly well just because that space is just going to blow up. There are so many emerging markets that aren't even using these digital payments yet. So there's just a ton of room to grow into. So I think it's a very interesting space to look. But there's a lot of innovation. There's a lot of change. And so that makes it hard to assess the risk. It makes it hard to predict what's going to happen 5 or 10 years from now, and protect your downside, at least to an extent that I would be comfortable with. So that's a few thoughts on payments. And the Baba delisting is something I'm really trying to wrap my head around more. You guys are going to see a video from me soon on that. But yeah, it's not clear to me that a delisting is necessarily a bad thing for Baba holders. That is not clear at this point. So thanks for your thoughts there, Maximilian. And for the super chat, where were we at here? Oh yeah, I wanted to mention Twitter. So I talked a little bit about Facebook. Twitter, why do you think Twitter seems cheap or undervalued? My hister. Just because the price is down quite a bit from recent highs does not indicate to me that Twitter might be cheap. It's at 46 right now, which in market cap terms, 35 billion. The issue with Twitter, I think it's very difficult when the users of your platform are used to it being free, to extract more and more value for the business, for shareholders out of that. Obviously, Twitter creates a tremendous amount of value. It allows people in, say, investing to find other great investors, to connect with them, to share ideas in such a frictionless way. So it's incredible. It's an incredible platform in terms of the value that it creates in the world. In terms of the value that it creates for itself and its shareholders, it's not clear to me how that plays out over the next 5 to 10 years. It's not clear to me that it's going to be a good investment. So that's what's kept me on the sidelines with Twitter. So I'm going to wait. I'm going to wait to see how that plays out a little bit more before considering getting in. 50% after fees. I'm not sure what that relates to, Tech. 50. I guess he's referring to Joel Greenblatt's Gotham Capital. I thought it was 40% after fees, but whether it's 40% after fees or 50% after fees, it doesn't matter. It reminds me of what Pabrai said. If you see a fat guy, you know he's fat. You don't need to know his exact weight, right? So they're both incredible rates of return. Dimitri, do you have your own stock that you bought outside of Dataroma? Well, what do you mean by my own stock? So I try very hard not to buy things that haven't made it through the filters of at least one great investor. Okay. And part of my ego was like, well, wouldn't it be great if I bought something without any tips, without any analyst work from these great investors, and it was a home run. Wouldn't that feel great for my ego? Yeah, probably. But that doesn't matter in the game that I'm playing because I'm not investing for ego points. I'm investing for financial freedom, for the independence of time that having a certain amount of capital affords me. So from that framework, I'm happy to copy all day, right? I'm happy to find the smartest investor in the room that's required to disclose what they're doing because the SEC is so generous, and just straight up copy and then go back to sleep until they do something else. Okay. So, I really more and more I'm appreciating the value of being a shameless cloner. Um, and to answer the question more directly, there's nothing in my portfolio now that I didn't find by looking at what great investors are buying recently. Okay. And I don't feel any shame about that. How heavy Baba on your portfolio? I was 20% of my portfolio into Baba when it was $227 per share. Okay. Um, and it gives me a little bit of comfort. I don't feel it's a little annoying, right? Seeing it drop 50%. But I think about Pabrai buying, I don't remember what he bought. I think he paid like maybe $8 for some stock once upon a time, and it dropped to 1, and he held until it went up to like 16. Okay. So the price doesn't really tell us anything about the merits of our investment. The business is what we're buying. Okay. We're buying an ownership stake in a business. And through that lens, the price of Baba in the short term doesn't matter to me. I probably want to own Baba for 10 years. Okay. I think it's that high quality of a business, that I want to let Alibaba compound my capital for me. And what the stock price does in the short term, it doesn't matter. It really doesn't matter. It'd probably be better for us investors in Baba if the market just was closed for a year, if we couldn't see what Baba was trading at. Um, So that's my take. What was the question? How heavy on Baba? So, it's dropped as a percentage of the portfolio since I bought because the price has dropped. Um, but that's just how it goes sometimes. Still like Seritage? Yeah, I still like Seritage. Nothing has changed for me on Seritage. I haven't bought or sold really since I first bought in around $10 a share. How long is your watch list and how many stocks you normally hold? Actually, you guys are my watch list. So it's funny, whenever I talk about a company, I've put out a few watch list videos in the past. This was actually true for Alibaba. Um, I don't have any alerts set. So I did a video kind of talking about my watch list. You guys reached out to me when Baba hit that price that I was kind of like, okay, if it gets down to this, I'm interested in Alibaba. So I got messages. I was like, okay, I'll take another look. And then, of course, Charlie Munger bought in, and that's really what got me over the hump. Um, I don't really have an active watch list right now. I've got sort of a list of what great investors that I track have bought recently. Um, but I'm not maintaining an active watch list. So, that's probably unsettling to some of you. But that's kind of what's working for me right now. Putting a lot more energy into learning from other great investors, kind of their frameworks for investing, than I am into specific businesses. So, um, that's a long answer to your question. How many stocks do I normally hold? I really want to hold 5. I want to have 5 high conviction positions. So like a 5 stock, 20% at cost kind of situation in my portfolio. I only have 3 high conviction, maybe 3.5 high conviction picks right now. So I want a couple more, but I'm not in any hurry. It makes sense to me that there's probably only 1 or 2 each year that are going to come by that are um, obvious for me to swing at. And so I'm going to be patient. Hopefully, in the next couple of years, I build that up to around 5 high conviction positions, and then I can just let that grow. And obviously, as more and more money goes into my portfolio from my income and whatnot, I'll need to find more, but probably only 1 or 2 a year. Did you look at pins? Yeah, Pinterest, I think, is what that is. I looked at it a while ago when I was looking at these platform, kind of social platform companies, but I haven't looked at it recently. So I think that's probably where we're going to stop today, guys. It's been an hour and 5 minutes. But thank you all so much for the vibrant conversation here in the live chat, for chatting with each other. It's just awesome. This community, it continues to compound in terms of the resources, what we have access to in this community. And I know there's a vibrant discussion on Discord as well through the Punch Card Investing YouTube channel. So if any of you aren't in that Discord and you want to continue the conversation with each other, that's a great place to do it as well. So you don't have to wait all week and just have an hour to chat with each other in this live stream. One more. Have you looked at IDT Corp yet? Jelani Taters. So I bought IDT Corp through my Magic Formula portfolio. It showed up, it met all of my filters for making it into those 5 picks every quarter through the Magic Formula. And then I think just a few quarters later, I saw Alta Fox. Connor Haley bought IDT Corp, and it like doubled pretty shortly after that. So that was fun. But I haven't done a deep dive on the business. It's in my mechanical Magic Formula investing portfolio. So anyway, guys, I will leave it there. Thanks so much for your engagement here, and I will see you all in the next one. Take care.